Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having an amazing day. We're taking a look here at Bitcoin, seeing what's going on, and happy belated Memorial Day if you're here in the States. Otherwise, happy Tuesday as well. What we're going to do is we're going to take a look at some high block capital data. So there's some pretty awesome stuff here we need to look at. We're also going to take a quick peek at some CME futures because there are some gaps and obviously a handful of other things. So if you're new to the channel, I'm not a financial advisor, love to teach people to trade. Hope you can learn something here today. Obviously, you want to become a better trader, cryptocash.tech is a site, link down below. We've got a trading academy, community, and signals group. And congrats to our community members who took a good 54% profit on Bitcoin here from a trade we took roughly a week ago. And then also taking a look here at Ethereum, nice 30% there. In addition, our most recent trade of 3 days later, we got a good 37%. Those trades are still open. Those are nice longs here. Effectively just took a majority of the position, so we just got a little bit left writing, seeing if we can hit those extra targets. That's awesome, awesome stuff. So again, congratulations to my community members for that. So let's just jump right into high block capital. What we're going to look at here is a few things. First of all, the key important thing here that I want to recognize is the fact that we have more asks than bids right now. So folks are trying to sell a little bit more than they're trying to buy at the moment. And again, this is aggregate across all exchanges, but generally speaking, when we see this, it's kind of like the start of a potential downtrend where people are trying to feel like the price is overextended and they're trying to sell more than they're trying to buy. We can also see here a lot more longs are closed here recently than they are opened. So in other words, as we can see, Sunday was a strong day. We'll talk about that here in a moment, but generally speaking, now that we've hit that high point, that 28.5 rough range there, the price is slowly bleeding out, and so are the long positions with it. So the longs are closing, and we're seeing more shorts being opened here as well in the last 24 hours. Okay, so kind of cool data there in the sense there, just kind of giving us that shift in momentum. The likelihood of downside might be more probable at this point, and I'll explain why as well and other reasons. So let's take a look here at our longs here for the most recent 12 hours. We can see that there are some early longs that are still kind of break even right now for the moment, but all the late longs are of course underwater. And as in regard to your shorts, you can see some pretty healthy shorts there, right at the 27,900, roughly 28,000 mark. So there's a couple of good short positions open. Even early shorts are still in the profit. So for right now, it's pretty much a short game, if you will, and the price action makes sense that it would continue lower at this point, just based on that overextension. Okay, so we'll talk about that here. Let's go ahead and just jump right into the daily. Actually, first of all, let's go ahead and go to the CME futures I was talking about here. So with CME futures, these they close on Friday and open on Sunday essentially. So in that time frame, what we can see here is there was a pretty significant gap up from the close on Friday. So Friday close, Sunday open. Essentially, it continued to progress really hard, right? So in other words, if we take a look at smaller time frames, you can kind of quickly identify roughly where we're at here. Price closed here on Friday, opened here on Sunday, and that is the price is essentially continuing to stay above that level. Now, that doesn't mean much at all. What it just basically means here is that CME gaps have a tendency of getting filled in a lot of cases, and a pullback to the 27,000 point might actually happen. Okay. Now again, is it going to happen now? Is it going to happen later? We truly don't know. But generally speaking, here's where we're at. Actually, let's go ahead and look at the daily just so you can kind of see a little better. We've got 3 gaps currently open. The one gap here is from 20,000 to roughly 21,000. That's a potential reality, but very stark distant reality. I don't think that's very likely considering our support at 25. But we do have a resistance level at roughly 30,000, but there's a gap right between 29 and 30,000. Currently, we also have this gap right now between 27 and 28 as a rough estimate. Okay, so generally speaking, it would make sense for the price to come back down and potentially bounce to fill this other gap as well. Okay, so I would say that we're steering a little closer towards a pullback here based on that sentiment alone. Again, you never take a trade based on one thing, but a lot of little things here so far, especially in the back end, are telling us that a pullback may make more sense. Okay. So let's go ahead and take a look at a few other things really quick here. Bitcoin dominance kind of pretty much right where it's supposed to be, right at its little resistance range there. Nothing much going on. Alts got hit pretty hard over the last couple of weeks, and we're seeing first green day in a while, but that hasn't closed yet. So all in all, the state of the market is not optimal by any stretch. So don't let this little guy here fool you. There could still be a pullback. And just keep in mind too, we have a support level at the 27,300. So if that gap were to get filled, we could see a candle wick down to 27 and then to bounce right back up because this is a new support range. Okay, new support range here, roughly at the 27.3 mark. So if we were to take a long, hypothetically, the next target would be roughly the 27,300 range, down to about 27,000. Do you want to short between now and then? Well, let's find out and see if there's any proof in the pudding. So what we want to look at first of all here is we are above 50 on the RSI, but we're not super high above. But key takeaway is as long as we close above that level, coincidentally, if that pulls back down to 27.3, we'd probably still be above 50 on the RSI. So that does reaffirm that we have a nice support level. Keep in mind this descending trend is now broken, so we should be able to ascend positively, and we can kind of just put this out here and kind of see roughly where that goes in the next few weeks, okay, or a couple days. However, this is definitely something we want to pay attention to. So are we able to establish an ascending trend? Well, we've got a MACD convergence finally for the first time in a while. Remember, we got all these MACD FUs here, and we can see the price action finally coming and breaking through. So that tells us we have broken the descending trend, okay? So again, shorting to 20,000 may not be appropriate, but a short to 27.3, maybe. That might seem much more likely or probable. Let's go ahead and see here though. First of all, when it comes to the moving averages, we can see the 50-day SMA rejected the heck out of the price action. So that being said, we're stuck underneath that, but we're above the 20. Remember, the 20 is the trend setter. So we want to pay attention to this 20-day set moving average and see roughly how it works out. But for the moment, the 50 is providing itself as a strong resistance level on the daily. When you look at the 4-hour, however, we can see the 200s working as a support level. That could very well be a very positive sign to keep the price action where it's at and continue higher. So again, shorting right now, it's 50-50, honestly. But we do have this ascending trend here as well with the 20. As you can see, working its way up that little channel there. Okay, so we're looking fairly decent overall. While the daily time frame does tell us we might see a little bit more downside, the immediate short term here doesn't tell us anything that's like super telling or super stark. Actually, correction, I'm going to second guess myself here, or more so contradict myself. This is an ominous sign here. No, this is basically a MACD divergence here on the 4-hour. We've been converging, so to speak, since Thursday the 25th. So for 5 days, we've converged to the upside, and now we've officially diverged here, because again, the 12 intersect with the 26 in a downward fashion, really just telling us here that momentum has shifted. So is that spelling a disaster? I wouldn't say disaster, but I can say that's typically a sign that we should see the price pull back at least, I would say, to 27.3. Worst case, to fill out gap at 27,000, maybe even 27.6. Sorry, 26.7. So again, there's a few different levels that we can look at. In fact, we can draw out some new Fibonacci retracement levels and kind of see what this may entail here in the near future. So let's go ahead and take a quick look at that here. So current support levels, roughly 27.5 is potential. 27.1 and 26.8. Those are pretty close to our previous Fibonacci levels too. So nothing too stark or blatantly obvious there. But the cool thing here is that we're above 50 on the RSI. If we remain above that level, we're okay. But there is still room for the price to pull back. Okay. So I'd be prepared for a pullback. Just get ready for it. And then if it were to, just say we get that little bounce off 27.3, that'd be a case in point where I'd like to be able to maybe consider another long position. But all in all, looking, I guess, just fair to middling on the 4-hour. We got some conflicting information. We're above support, but we're also diverging. Okay? A lot of times when you see those two things together, they kind of cancel each other out. So we'll see what the 1-hour tells us here. TD sequential, let's take a quick look. We got overextended up to this level here. So congrats to some of our community members that shorted from that level. Very well done. We can see here that we came down to a 6, bounced off that level, came up to a 5. So we're not really overextending ourselves too much here. We're kind of range bounded, for lack of better terms, between 27.5 and the 28,000 mark. Okay, so this little $500 range, we'll see what happens here soon. If we break down below this level of 27.5, I would say 27.3 or 27,000 would be probable. But for right now, we haven't established lower lows yet. We're establishing parallel lows, and that's an important thing to recognize, because a lot of times when you have this kind of trend, for example, when the price works itself into like a type of wedge here, the probability of breaking to the upside is higher because of the fact that it came from the downside, right? So it's a statistical probability the price would increase here moving forward based on that sentiment. Once again, we don't truly know yet, but we are ascending positively until we break this ascending trend. We have to assume it's going to continue, okay? So let's go ahead and take a quick look at the Ichimoku cloud and kind of see where we're at with support ranges here. We are within the cloud right now, and you can see it running concurrent with this trend line. We can also see that the conversion line is above the baseline. We have a little bit of momentum, but not enough here. And of course, lagging spans in the price action, and so is the price within the cloud. So the general rule of thumb here is if the price is in the cloud or you've hit that conversion line, if you have a long position open, you would have wanted to take a profits by now. You wait for confirmation either above or below. So if the price action stays at this level and goes sideways, once again, not honoring the ascending trend, then we'll see here that the price action is more likely to shoot down than up, because it will then be below that resistance level on the cloud. Okay, so that is something I like to pay attention to. So I would say at the end of today's trading day, we have roughly what 5, 6, 7 hours left in the trading day here today. Once these candles get all the way to the side here, if we just go straight sideways from here and we can't close at 27.8 or higher, the probability of further downside makes a lot more sense. Okay, and again, the main reason why is because we'd then be establishing lower lows and potentially lower highs again, and we'd be in a situation where the price action should continue lower. Okay, so just keep in mind, we're not in a fantastic situation right now. We're not in dire straits either. It's one of those wait for confirmation situations that I know a lot of you folks do not like to hear, just because impatience is a very common characteristic in trading. And again, it takes a while to develop. Okay, so 18, 19 years of trading, I can tell you, you learn a thing or two about hanging tight, and FOMO is not really that your friend, if you will. So try not to feel like you've missed out on anything. Wait for the right opportunity. Set some alerts. Put yourself in a position where you can feel more confident in taking a trade. Right now, we've got a lot of downs, a lot of ups, kind of contradicting each other. And yeah, it does seem likely that we're going to see a pullback to 27.3, maybe even 27,000 to fill that gap. But it's fairly risky to do that right now because there's a lot more volume, a lot more momentum going into this. And even though we've shifted that momentum on the 4-hour time frame, we still have a lot of strength in other situations here. So if I were to give a statistical probability, it seems like downside is slightly more favorable than upside at this point, but we still got to wait for confirmation because you don't want to trade into the cloud here and have yourself, left out in the rain, so to speak, with a short position that just keeps going up. Okay, so please be patient. I would say wait for today's trading day to close. We got to close above 27.8 today. I think that's a green light to leave a long position open. We close at 27.5 or lower, then we are going to probably continue lower. We close in that range of 27.5 to 27.8. I think we should probably hang tight and wait for a break above or below. Okay. Again, I'm not the gambling type, so I really recommend waiting it out and being patient. So if that's not something that you are good with, then maybe you want to consider joining our trading academy, because I can tell you, I teach you a lot about how to be patient. It's a really important thing to recognize, and learning and growing with all our community members is really a nice feature too. So be sure to check that out. One last thing here, if you haven't checked this out already, I've got a few slots left available here for our BINGX giveaway. It's basically a $100 trading bonus for no volume or deposit required. But once again, this is a benefit to our community members because we're going to have signals and copy trading as well here in the very, very near future with this exchange. And the reason why we are going to do that is because Canada, Europe, Oceania, US, UK, none of those countries require VPN or KYC. Okay, so it's kind of a pivot from Bybit. While Bybit was a good exchange, full KYC affected a lot of folks, and this is a significant benefit. Go ahead and partner with BINGX. That's the reason why we did. I can tell you, if you use our link below, you'll benefit from a lot of different features. Be sure to check that out. I hope you have a great rest of your day. Thanks again so much for joining me here. We'll see you in tomorrow's video. Take care.